Test, test, test. We are recording. Alright, so it's been a long time since I've done any sort of update. I've been really fucking busy. So on this channel, I cover equities, precious metals, and crypto. We'll go ahead and start with crypto since crypto is really popular on YouTube, but I don't really have a lot of good news for you guys. Just to be completely honest with you. We'll get rid of this. As you can see, this is the total crypto market cap. You're sitting just above 1 trillion right now. All throughout the equity markets rally of 2023 until now, crypto market cap's gone up by about 50%, which is a huge move. But as you can see, we're getting a lower high here, and we're going to get basically an equal low right here. So that doesn't really look good. And if we look at, so this is total. This is everything including Bitcoin. And then if we take away Bitcoin, you can see it's even more distressed looking. We have equal lows here, here, and here, and a lower high here and here. And if we just use our imagination, we can draw a pretty convincing head and shoulders pattern right there on total 2. And then if we take away Ethereum and we look at total 3, you can see, let's get off the 4 hour, we'll go to the 1 week. You can see it's even worse. As you can see, there's August of last year, there's April of 23, there's July of 23. You've gotten a lower low every time, or sorry, a lower high every time here. And this trend seems to be holding. This does not look like strength to me. That looks like weakness. I mean, I think something like this is in store, and I think you're going to go back down, personally. If we look at the total crypto cap divided by the S&P, you can also see, why would we divide it by the S&P 500? Well, the S&P 500 represents the 500 big cap equities that pay good dividends. Bitcoin doesn't pay a dividend. In case you're not aware, a dividend is basically like, so say you hold shares of Apple, dividend, if you own 1,000 shares, I don't know what their dividend is, but say it's like 5%. If you own like 1,000 shares of Apple and you get a 5% dividend, you're going to get a certain amount of Apple stock paid to you as basically a monthly payment, just from holding the stock. If you do staking, if you stake Ethereum, it's a similar concept, but not exactly the same. But as you can see, if we take the total crypto cap and we divide it by the S&P, you're still literally flat for basically, I mean, look at this. You're basically flat for the better part of a year and a quarter. You haven't moved at all on stocks. So I don't get this bull scenario all the crypto people are feeding you. I mean, they're always going to feed you bullshit. Just remember, the crypto people are the most speculative, least professional investors, in my opinion. And I know that from personal experience because I was one of those chumps that bought into Luna and other crypto pump and dump schemes. So if we take, this is even more obvious to me what's happening if we look at total 2. So this is the total crypto cap minus Bitcoin divided by the NASDAQ. Now the NASDAQ is a basket of high beta tech stocks that's been performing relatively well. But as you can see, throughout this entire secular trend where we've had Bitcoin come up 103% off its bottom, and it's still up 67%. But if we take that, we take out Bitcoin and we compare it to the NASDAQ, you're actually down 13%. So why is that important? The NASDAQ is actually where more intelligent money is. Now, why do I say intelligent money? I'm talking about hedge funds. I'm talking about big fish. Okay, the entire crypto market cap is like $1 trillion. It's not really that big when you look at the equities market or the bonds market, for instance. So like the total the total amount of money in the bonds market has got to probably be in the quadrillions or something like that. So it's an order of magnitude larger than the cryptocurrency market cap. And the NASDAQ is one of the highest beta indices that one could trade. I'm speaking from an American's perspective, by the way. So some important things to note. So if we look at Bitcoin, it looks a lot healthier, relatively speaking, than that, obviously. I mean, that's really clear. But what else did I want to show you? Okay, so here's Bitcoin divided by the NASDAQ. You know, this pattern looks really clear to me. Shoulder, head, shoulder. There's your neckline right there, this dotted dash line. I think you're in for a marginally lower low or something down here, and then eventually you'll push back up this way, and then you'll get an actual W bottom, and this will be your W bottom right there. But I don't think the pain's over yet for the crypto market. I think you're going back down here, and you'll make a marginally lower low, or a similar low, and yes, that means all the way back down here towards 15, which would indicate another 40% drop, which I think is totally reasonable. Let's put this on logs so it's prettier looking. So these lines line up. Okay, so this structure right here, boom, 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 these three lines, this whole thing right here is a rising wedge. And you just spilled out the side of it with some momentum there. Yeah, I want to remove that. We'll clean some of this up so you know what I'm talking about. I'll make yeah, so this wedge thing right here. This. And you just popped out right here. So I would suggest something like that is in order. And then you'll go back up. Of course, you'll go back up eventually. But first, I think you need to revisit this trend line right here around 15, which also coincides with another technical level right here and right here on the previous December 17 highs. So, and then you'll get a true W bottom. People were thinking this was the W bottom right here, this thing. But what I'm saying is that'll be your W bottom. Something like this. If that makes sense. And who knows, maybe I'm wrong and it actually goes down even further. But I would wait and see let this play out, because somehow the NASDAQ is beating Bitcoin right now. Look, the NASDAQ has been in a bull market against Bitcoin since April 2021. That's 853 days. It's gained 145% on Bitcoin. So that's not good for Bitcoin. Now let's look at Bitcoin divided by gold. For one Bitcoin, or how many ounces of gold fit into one Bitcoin? So right now it's about 13.7. As you can see, it just took a big haircut on this rising wedge pattern, this rising thing right here. So I can point it out again. This is the same structure I showed you on the other chart. You spilled out the side here, and I truly believe you're going back down to around here, about 9.3. I think that's, that's your first stop. But if you're a bull on gold and silver, then honestly, it's, you would argue that it's probably going somewhere even further down here, maybe. Not good news for crypto people. And I know crypto people are literally addicted to the shilling and addicted to the fucking hype, addicted to fucking Raoul Paul Barron Network, Altcoin Daily, all this dumb YouTube shit where they literally just shill you guys. You guys need to wake up, okay? Like, in previous videos I've been more level-headed, but to be in crypto right now, you literally have to be retarded. This is very weak. This is not good behavior. You see how every time you get a pump, it immediately spills back down like halfway. Doom, boom, boom, boom. See, look, this entire pump that you had back in June, you moved up 25% on gold, and then there's July. You're at the end of August. You gave it pretty much all back up. So if Bitcoin was in a bull trend, it wouldn't be giving up these big pumps. Okay, it pumps a bunch, but it gives up half of it. Pumps a bunch, it gives up another half. Pumps a bunch, it gives up more than half of it. This isn't very bullish. This is weakness. It's getting sold off every time it gets pumped. See, pump, sell, pump, sell, pump, sell. So all the pumps are being sold. I wonder why. It's because the smart money knows that even the NASDAQ is doing better than the crypto markets. See? Let's get some of this off. Even the NASDAQ is doing better than crypto markets. So, like, there's Bitcoin divided by silver. I mean, this kind of does look like an inverse head and shoulders. Head, shoulder. But, and it, it has some characteristics of a V-shaped recovery. But it still looks a little too weak. Something looks wrong to me. So I am still a bear on cryptocurrencies. Nothing else has changed. And if we look at some others, some of the altcoins, here's Chainlink, Stinky Link. This entire time this year that Bitcoin's been making higher highs, went from 15K to 30K. What's Chainlink done? Fucking nothing. Literally 0%. So that's why if you take a look at Total 2 and Total 3, they're a lot weaker looking than Total because Bitcoin is carrying the market. Bitcoin is the least risky of all of these speculative assets. Let's look at another one. For instance, here's one that I invested a decent amount into that apparently had no fucking use case at all because it's just continuously bled down from your 2021 peak. This is UBT. This is called UBT stands for Universal Business Token. And apparently Coca-Cola has been partnering with UBT to do, I believe, inventory management and other sorts of things. I don't know. If you want the full story, Google UBT Coca-Cola. They did some sort of trial partnership thing. But anyways, so I thought this one had a huge use case. Coca-Cola is a big fucking company, obviously. But as you can see, it's done nothing but shit the bed. Along with most of these other tokens that aren't big Bitcoin. They've just been garbage, just hot garbage. Like if you look at Litecoin, this is kind of interesting looking because this looks like it could be a really big macro head and shoulders, which would be bad, which means you're probably going back down here somewhere on Litecoin, down in the 20s. Let's look at Doge. Oh, that's funny. So yeah, Doge, real funny, meme coin, blah blah blah. My friends, this does not play to the upside. What this will probably do is bounce around in here, pump, you get it really excited, and then dump hard. That's what I would see happening for this. Because this contraction right here that's taking place, all this contraction is going to lead to expansion, but I don't think there is a bull case in the world that actually exists for a meme token like Dogecoin. So yeah, I do think it's going to go back down to here. I don't care if Elon Musk thinks it's cool. Here's Chiles. I mean, just absolute garbage. Like all of these tokens are pretty much giving up their entire pump, or some of them are giving up their entire, COVID money printing pump, all back. Okay, so that covers crypto. I'm a bear still. Surprise, surprise. Okay, now let's look at some. Let's look at some. We don't want to look at PCE. Here's an interesting chart. United States Economic Optimism Index. Blah, 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 blah. Interesting little index I found. But I would say anything below here, you're dealing with a low level of economic optimism. Now, what were those times? 2015, 2013, 2011, 2008, 2005. All right, not a great representation of what's going on. We're just going to move on from that one because I don't really know how to interpret this one. I haven't used it that much. But we're flying by the seat of our pants here. Let's look at this. This is the yield curve. This is the 2-year minus the 10-year. As you can see, every time the yield curve inverts is denoted by these blue lines. We have another inversion going on right now, but it has yet to play out. So if we add this to compare, add to compare, and we just go look at the S&P. We're gonna have to change the scale. Okay, so here's the .com. Yields inverted right here, and then the market crashed. There's a housing market crisis. Yields inverted right around here. Then the market crashed. There's COVID. Yields inverted right here. You know, spike, flash crash. And here's now. Yields are very inverted, more inverted than ever. And we had a bit of a crash and then a pump, but ultimately, I believe we are in for what is called a double top. There's your first top, there's your second top. So that's my thesis. As you can see back here, we had a head and shoulders, shoulder, head, shoulder. Neckline is denoted by this right here. Then we had a pump right up to the legacy neckline and then a huge sell-off. So technically we're still in a bull trend. You know, you could do something like this and crawl back up here. But until I see that happening, then I am a bear. And let's look at the S&P divided by the money supply. Why would you want to do this? Well, they keep fucking printing money. Just so you know, there's the .com bubble. There was our ultimate peak. Now, obviously, this is all 0, 0. This is just a visual representation of what's going on. There was our ultimate peak in the stock market compared to how much money that we printed. As you can see, every bull market in equities since has pumped up to this level right around here and then gotten sold off. So there's housing market crisis. Then you had a huge bull market in equities off that low. And then we get to COVID, flash crash. 2021, big crash. And then we go and touch it again and we get another sell-off. So, you know, you could be doing something like this. You know, if you're a real bull, here's the bull case. You go down. Doot, and you go somewhere up like that. If you're a bear, this rolls over down here somewhere. Anyways, the more money we print, the harder it gets for the stock market to make a new relative high compared to how much money we've printed. Obviously, you can see that here. There was way less money in circulation back here, and the S&P actually made, well, we can't actually measure. S&P made a higher high in relative terms to how much money we have printed. So important stuff here. Because we keep printing, the relative value of the stocks is actually not really increasing. It increases on paper, but that's because of asset price inflation due to more money entering the money supply. If you hand out $4 trillion for free, that makes all of the other dollars worth less, and consequently the things that are denominated in those dollars go up in dollar terms, but in value they stayed the same. You can look at this on exotic cars, meat, like if you're buying red meat in the United States, you can see it with houses, you can see it and all sorts of things. You're getting asset price inflation. The value of the underlying goods has not increased. The amount of money in circulation has. So the prices seem higher and things seem more valuable, but that's only because they dumped a shitload of money into the system as a stimulus after COVID, after this thing right here. They're like, oh, we can't do that. Dump a bunch of money in, then we have this big run. Okay, well, we still have a fuckload of inflation because of that. Not good, not good. So let's look at the, where does this go? Actually, let's not look at that one. We're going to move on to, let's look at Tesla, because a lot of people, a lot of people like this meme stock, but if you have eyeballs, if you have fucking eyeballs or a fucking brain, you would see that we had this giant legacy head and shoulders back here. All the while, Elon Musk is splitting your shares up even more. So here's dilution at a rate of 5-to-1. And then here's some more dilution at a rate of 3-to-1. Who knows how many, percentage-wise, it's probably over 150% more shares of Tesla outstanding than before these splits, So, split, you have this huge run-up. Anyways, what I'm getting at is your most recent pump in Tesla. Where did it go? Oh, look, it went right to the fucking legacy neckline of this macro head and shoulders here. And then you got rejected. So, in my opinion, you'll probably see something like this. And you'll get another little micro head and shoulder type thing happen over here. Yes, I still think it's going down. I think it could even go back down to wait. Think about it. If you split the stock apart 5 times and then do it 3 times more, that means the shares are diluted, essentially. So I really don't think you're going to see valuations like this. $413 a share for Tesla. I don't think so. Not in a time where the yield curve is inverted. Okay, so there's Tesla. There's some others here that are kind of interesting. Let's just pick one. We'll pick Coinbase. Oh wow. Look at that. Basically nothing over the past year. So yeah, I wouldn't be buyer there. There's no strength. All right, now let's move on to gold and silver because I don't got all damn day. Here's gold. And most people have seen this now, but in case you don't, cup, handle, cup, handle. Now cup and handle is a bullish chart pattern. How do you measure how big the move is? You go from the top of the cup to about the bottom-ish, but then you put that on top of the handle. That gives us a price of $2,700 for gold. I think it'll overperform. I think you'll go up there to 3K. Eventually, obviously it's not going to be a straight shot up, but this is a bullish chart pattern for gold, just so you know. Now why is this bullish? Why do I think that? Well, here we have a chart of gold divided by the money supply. And if you have keen eyes, you would notice that it's the inverse of the S&P divided by the money supply. So here we're at a point of relative undervaluation of gold to the money supply, as well as the stock market. Let's turn on these 1 month channels. So these don't look great, but okay. So there's 2011. Here's the 1980 blow off top. It's probably easier to see if I just show you on the S&P. So here, here's the start of the dot-com era issue. And that gold loses a bunch of value compared to stocks, but after the dot-com bubble burst, which is pretty much around here and is bursting, gold moves up 770% against the SPY. What I'm saying will happen again is, since you're at a point of relative undervaluation. Why is it relatively undervalued? Let me show you the RSI. Now, the RSI is a lagging indicator, but still I need to show you. Do you see what I'm getting at now? You have a lot of room for this RSI to go back up this way before you're overbought. So yeah, I think something like that'll happen. It'll be nice and smooth, and eventually you'll move to the other side of this channel. Who knows how? And then you'll get sold off, and then it'll happen all over again. You know, on these 20, 30, 40-year cycles in the economy and in debt markets. So there it is. Here's the price of the S&P divided by gold. So as you can see, here was our last little most recent pump that's happened this year. These are monthly candles. And as you can see, despite the stock market going up, what did I say, like 50%? I don't know whatever the rally was this entire year. You've really only, here's January. You really only moved up about 6, 7, 8% against gold, and you're making lower highs. There's your first lower high. There's a second lower high, unless you break out even more. So technically right now this is bullish, but you know, I would still be very cautious, because you could just be distributing up here in this range again. As you can see, this has been a level of resistance before, right around where the SPY is at. And if we just go to the 4-hour and we change this kernel estimate to the daily, you can see we just actually broke down. I know that gets really zigzaggy, but here's the past couple days. There's July. Here, where did August start? Here's the start of August. And now we're at the end of August. If you know anything about the stock market, you would know September, October aren't really great months for the stock market either. So I would expect this devaluation of equities against precious metals to continue throughout the year. Maybe you'll get some sort of Santa Claus rally. But you remember all the shit they were saying last year. They were saying Santa Claus rally, and eventually it did happen. It started in October and really went to now, which is like a whole year. But I really don't think it's going to continue. Let's look at gold divided by Amazon. You just sort of started to push up and maybe have started a new upward trend. Maybe unconfirmed. As you can see, sometimes you get some chop. We could just chop again and go lower. But if we look at it compared to some of the other indices, here's an NYSE. Gold's obviously doing a little better than the NYSE. Let's look at the Russell. Definitely broke out against the Russell. Definitely broke out against Tesla. So look at this. Gold has been in a bull market against Tesla since July 19th, 2023. And since then, you've gained 17% on Tesla. And you still think your stupid fucking Cybertruck is going to get you a bunch of money? Tesla is a meme stock, guys, and they split their shares a whole lot, so just be careful. We'll move on to silver. Silver's been having a great day. Fucking awesome. Couldn't be happier about this. Let's go to the daily and take this bullshit off and turn that bullshit back on so you can see what's happening here. As you can see my little smiley face going on here, this is your right shoulder. Or sorry, excuse me. Well, this is your left shoulder. And here you have a right shoulder forming. And here is your head to make an inverse head and shoulders. Now, an inverse head and shoulder is a bullish chart pattern. So I think something like this is going to happen. You'll complete your head and shoulders. Then you're going to travel back up this way towards 28, 30. And eventually, if you look closely, this cup and handle coincides with gold's cup and handle, except the cup and handle on silver is much larger. Why is that cool for us? Well, you measure the technical potential of a cup and handle by the depth of the cup. So if we take that and we just place this up here and we measure from our current position down here, 1400% if this cup and handle gets confirmed. Obviously, this is going to take years to play out. Look at this. This is 1980. We're now in 2023. This is a macro trend. You don't get rich overnight by investing in gold and silver. That's why Gen Z doesn't like it, because they're fucking hotheads with ADHD and they'd rather be told by some fucking middle-aged guy with a British accent on YouTube that their bags are going to a fucking infinity if they just buy this damn, you know, fucking gay coin, whatever it's called, you know. It pisses me off. Crypto's bullshit, guys. It's mostly bullshit. Crypto's 99% bullshit. Just saying. So, obviously you understand where I stand on that. But anyways, you got a nice inverse head and shoulder right here. Eventually you're going to break out. You're going to go up to 28-ish, 30-ish. And then on and on and on until you complete the handle. Once you complete the handle, gold is obviously going to be in a hell of a bull market by then. Once you complete this cup and handle, I have no idea how long it could take to get up there. But technically that is sort of the way you measure the potential of a cup and handle. Which would just be insane if we saw $420 silver and you're at $24 right now. It's not a get-rich-quick scheme. Look at this. Look at this. 1980 to 2023. It's not a get-rich-quick scheme. So I think a lot of people get turned off by gold and silver because they don't see the long-term potential. Let me show you something. Let me show you why you should own gold and silver. Here's the M2 money supply. This is why you need to own gold and silver. This is what our government does to our money supply. Printing, printing, printing. We're just going to keep on fucking printing, 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 printing. Oh, COVID hit? Let's print a whole bunch. Oh, now we have to tighten. Now we have to tighten. So we're going to get rid of a little bit of money, but then we're going to print some more because we're in debt and we have no way of paying our debt obligations. Like, look at this fucking line. Look at this line. It's fucking hard to comprehend how quickly they're fucking printing money. I don't even understand this number over here. Do you guys? 20902700000. What is that, like? I mean, you know what I mean? Okay, yeah, 20.93 trillion. Incomprehensible amount of money. That's why you need to own gold and silver. You can't just print a fucking metal that they have to mine. You can't print it. Listen. You hear it? They can't print it. They can't print that. People have to dig it up out of the ground, and it takes a lot of energy and money to do that. And you may be asking yourself, well, gold's target is around 3K, you said, for its cup and handle. Why is silver's cup and handle? Why is silver more bullish or more relatively undervalued compared to gold? Well, here's a little known thing about silver. In real life, let's go to the gold to silver ratio. gold to silver ratio sits at about 80 right now. That means it takes about 80 ounces of the silver stuff to equal 1 ounce of the gold stuff. Now, in real life, I'm talking 2023 on the planet Earth, the ratio at which silver is mined to gold is actually about 8 or 7 to 1, which means for every 1 ounce of gold that a mine produces, they only actually produce about 7 or 8 ounces of silver. So if you bear in mind that knowledge, this technical structure makes perfect sense, because silver is undervalued relatively. Because if we go back to gold and silver, this should be down here at 8. If this was real life and everything was fair and legit, which it's fucking not, since the silver markets are manipulated by BlackRock and their SLV fund. There's been multiple lawsuits and cases. You can go ahead and Google that if you don't believe me. This is where it would be if we didn't have a bunch of fucking assholes running everything. Probably. It would be, historically, it averages around 15, but in real life, it's pulled up at a ratio of about 8 to 1 down here. So if you got a correction that big in the gold to silver ratio, you would see like $300, $400 silver. I don't know if that's going to happen, because obviously we live in a world with a bunch of fucking Marxist communist pigs that are trying to take over everything, and a bunch of fucking pricks like Joe Biden running our government. So who knows what's really going to happen. I'm just presenting to you the technical data. I'm not giving you any... I guess I gave you some fundamental thesis as to why you would want to own gold and silver. But really, I'm just sharing some fundamental stuff with you guys. All right, well, we'll look at one more thing, and then I'm going to wrap this up, because I don't got all day. Here is the Russell divided by an ounce of silver. You can see our OG top back here in 01. Then we had our .com bubble. And then the Russell took a huge haircut against silver. And here we are again, topping out at these historical levels right around here in a downtrend. Lower high, lower high, lower high, lower high. So, it's pretty clear what's happening to me. Eventually people are going to wake up, but I don't think the government wants you to. I mean, clearly it doesn't. Would rather you be stupid, sit around and wait till all your money's destroyed, and then you have to use their central bank digital currency. They would love for you to do that. What I would love for you to do is go buy something they can't put their fucking hands on, like gold and silver, or guns and ammo. But you do you. The data really shows what's going on, though. So, peace out, guys. Best of luck.